Bitcoin has existed for 15, 16 years, but in the public markets has only existed for about a year and a half, 2 years. And I think it has probably another kind of 8 to go through the full decade to really saturate the opportunity that is immediately ahead of it. Opportunities of just investors continuing the march of learning about it, approval on platforms, testing on client allocations, and going above the risk curve. And so from our perspective, it's very much in early stages.
Hong Kim is the co-founder and CTO of Bitwise Asset Management. From launching early crypto index funds to helping bring Bitcoin ETFs into mainstream portfolios, Bitwise focuses on translating digital assets into regulated, accessible investment vehicles.
So 2017 to now, asset management of crypto has evolved a ton. So how would you categorize it today?
I would categorize it as still very in the early innings. So if you think about gold is such a mature asset. It took about 7 years of higher kind of annual cumulative inflows for it to really saturate the opportunity that it was meant to saturate in public markets. Gold always existed in private markets, but in public equities and public markets, it had been introduced for the first time. Bitcoin and crypto at large is going through that process just now.
Today's guest is Hong Kim, the co-founder and CTO of Bitwise Asset Management. We are recording this live from Token 2049 here in Singapore. I'm excited to sit down with you, Hong. How are you?
Excited to be here.
Excited to do this. I know Hunter very well and Matt as well, so it's nice to meet you and kind of get your perspective on things. And as a CTO, I'm sure you have a way more technical, analytical brain than maybe Hunter. I'm sure he does too, but you know what I mean, right?
Yeah. Totally.
Yeah.
I'm the co-founder and CTO.
Yeah.
And so I over the years I've been more of internal operations or technical side of things. So usually Hunter and Matt are the spokespeople for the company, or even Teddy at times. So I don't do this often, but it's an honor to be here.
Well, thank you for taking the time. I'll be nice. Don't worry. We'll have a fun time. So you co-founded Bitwise, and it was really kind of in an era before crypto asset management took off.
That's right.
So what was kind of the thing that you guys saw so early on? And obviously things have evolved from then, but let's start maybe at the starting point. And what was the opportunity you saw at the time?
Yeah, so it was in 2017. Hunter and I were both we come from a more tech background. I was a software engineer, a computer science major, and Hunter was a product manager at Facebook before starting Bitwise together with me. So we came from a tech background in San Francisco, 2017, and I think a lot of our peers was getting really interested into Bitcoin, Ethereum, and crypto again for the first time in a while. In 2013 was when Coinbase began, and there was a little bit of excitement then. But then during the bear market between 2013 and 2017, the interest was low. And in 16, 17, when we were sitting in San Francisco thinking about what to work on, crypto interest was really taking up amongst our peers. And Bitcoin was still about $100 billion market cap asset back then.
So tiny in comparison. Yeah.
Ethereum and XRP existed, but they were much smaller. So from anyone from traditional financial background, I don't think anyone saw that as, this is a real asset class. It's more like, okay, Bitcoin is its own kind of thing.
Subcategory of something. Yeah.
And kind of how we maybe sometimes maybe like the kind of meme stock traders are looked at these days.
Bitcoin was the meme stock at the time.
Yeah. I think most people, traditional investors, kind of saw it that way, and it was something that kind of young people put in a credit card and traded around. But it wasn't something serious that you would invest from your broker's account or think about it as a portfolio kind of allocation and such. And I think we over time became believers that there was a there here, that Bitcoin, wherever we were in that hype cycle, had a future. And if it grew another order of magnitude, if it became $1 trillion, $2 trillion, and a multi-trillion-dollar asset,
it has become,
then it would need asset management. And most businesses at the time were kind of exchanges. And again, that is kind of more like there's brokerages like a Robinhood or Schwab, etc. And then there's like a BlackRock or a Vanguard that are asset management firms that create asset management products. And we felt that didn't really exist because people were taking it seriously. What if they did? Then it would be an opportunity, and that's kind of the bet that we took.
So you made crypto serious in a way.
I think we took it a little bit seriously before before.
Still not fully serious. You know what I mean?
Yeah. And then that was kind of the insight that we had.
Okay.
We were willing to believe it a little bit ahead of other people. Yeah.
So 2017 to now, asset management of crypto has evolved a ton.
Absolutely.
So how would you categorize it today?
I would categorize it as still very in the early innings of its. So if you think about gold, GLD launched in 2003-4, and that gold is such a mature asset, and ETFs launching, you would have thought that the kind of professional investors allocating into it from their kind of through their institutional processes would happen very quickly. But it took about a decade. Gold in the first year took in $2 billion in assets. Second year took in $3 billion in assets. GLD took in the next year $4 or $5 billion, and then it took about 7 years of higher kind of annual cumulative inflows for it to really saturate the opportunity that it was meant to saturate in public markets. Gold always existed in private markets, but in public equities and public markets, it had been introduced for the first time. And I think Bitcoin and crypto at large is going through that process just now. Bitcoin has existed for 15, 16 years, but in the public markets, it's only existed for about 1.5 years, 2 years.
Right.
And I think it has probably another kind of 8 to go through the full decade to really saturate the opportunity that is immediately ahead of it. Not even kind of the out there opportunities, but just the opportunities of just investors continuing the march of learning about it, approval on platforms, testing on client allocations, and going above the risk curve. And I think we're maybe in the second inning of that journey.
Okay.
And so from our perspective, it's very much in early stages.
Yeah. Okay. And as CTO, you obviously have a very technical point of view. You're overlooking the businesses, what platform, the way people integrate with it and stuff. So what is the most in-demand products right now? And then what are you really trying to scale on that front?
The popular parts are still the Bitcoin ETF, Ethereum ETF. I think this year a big trend is actually equities. So we have a crypto companies ETF called tickers BITQ, and we have had that product for about 3-4 years. But this year is really when it started taking off more. Now that has about 300 million in assets.
Okay.
And I think Circle's IPO early in the year was really a big moment for TradFi investors. They knew about Bitcoin, but crypto companies really, they knew about Coinbase, but that's an exchange, and there's a lot of and I think a non-exchange, non-Bitcoin crypto company that popped out the $50 billion market cap that had size and had a lot of IP kind of traditional institutions involved in the IPO and making a lot of money there, and stablecoins catching them off guard and kind of having the traction. I think that was really a moment where people started thinking about crypto equities as well, beyond just the assets, and seeing how profitable and how large scale revenue these companies actually have, and starting to think about crypto as an industry as well, beyond just an asset class.
Yeah. Might be a stupid question, but would Bitwise ever IPO? Not a stupid question.
Yeah, and not a stupid question these days. I mean, there's a lot of great crypto companies that are going public and having great valuations. I would say that we're definitely here for the long haul. We've been doing this for the past 8 years.
Yeah.
And Hunter and I work about a year to get the products launched, but we've been working together close to 9 years on Bitwise. And we'll be doing it for the next 9 years as well. And I think we... So
never say never.
Yeah, that is possible.
Okay, fair enough.
Well, we've been enjoying the journey of building.
I'm excited for your IPO.
Thank you.
Okay, so I think of Bitwise from an American perspective because I am American. I think Hunter told me like 1 year him and Matt Hogan did like 10,000 calls or something like that to advisors and stuff. They were just calling people up over and over, like, have you heard of Bitcoin, ETFs, etc., all that, right? That's true.
I think that so maybe that
might have botched the story a little bit.
No. So we have about a 30% fully dedicated distribution team in the just covering the U.S. alone. We now have a team in Europe as well, and that team does about 20,000 calls and meetings a year.
Okay, 20,000. So it's double what I said, and it's a whole team. But yes,
it's not Hunter and Matt dialing every day.
Yeah, they got other things to do too. Yeah.
But that team does Woodfall's initial meetings, and Hunter and Matt travel. I think Matt is traveling maybe 8 out of the past 9 weeks or something like that. It's constantly on the road.
Yeah.
So then, when conversations evolve to a certain extent, when it reaches the investment committee or kind of allocation stages or serious, then Hunter and Matt would often really actually fly to where the wealth team is, or the family office is, or where the institution is, to actually show up in person and educate people about the asset class and our products. Because I think still there's a lot of comfort and trust that is built by just showing up and getting to understand the firm in that personal sense.
Yeah.
Because the asset class in the industry still is looked upon as very, very risky or hard to understand, or sometimes even shady. Yeah. So that's always a differentiation that we had. And another differentiation that we had is that we've just been consistent. We've been doing it for 8 years. And now a number of firms have just been hearing from us year after year, even in bad years. I think a trend that exists in, if crypto isn't the only asset class that you cover as an asset manager, then on the bad years, you stop talking about it.
100%, yeah.
And that's what the experience that financial advisors and wealth senior institutions have. Yeah. But I think that's the differentiation. One of the things that different Bitwise is that, like, you're going to hear from us good days and bad.
Yeah. 100% through the tops and the bottoms and everything else in between. A lot of times people will ask me, like, oh, should I buy crypto, especially during bull markets? And I'm like, where were you when everything was down? Nobody wants to talk about it when things are going horribly. Not financial advice, but like it's something that you should be talking about 24/7 if you are in this industry, and like vouching for. And I'm sure they appreciated that, right?
Definitely. I think trust is really built over time, and that's one of the things that just cannot be replicated. And I think, especially in asset management, people recognize the value of that because people launch products, people can kind of disappear if the product doesn't form. But the consistency and the continued presence is really what builds trust, I think. Yeah.
This episode of Talking Tokens is brought to you by Fireblocks, the stablecoin infrastructure of choice for top global businesses, from Visa and WorldPay to Bridge and Revolut. With over 100 billion in monthly stablecoin volume, Fireblocks powers stablecoin strategies at scale with infrastructure that enables PSPs, fintechs, remitters, and banks to issue, move, hold, and manage stablecoins. And it's all done securely at scale and with built-in compliance. With Fireblocks, you get complete control to build your own stablecoin orchestration layer, create payment accounts, manage liquidity, and access on and off ramps into over 60 currencies, making it easier to build, scale, and expand your stablecoin business globally. Learn more at fireblocks.com. What about in the APAC region more specifically? Obviously, we're in Singapore right now. I don't know if you were at Korea Blockchain Week last week as well, but I went to both events, and I think it's vastly different than the American conferences, the conversations, etc. I'm curious if you have the same perspective, or how do you look at this market?
How did you see it differently?
I think it is very focused on speculative trading. There's a lot of people that just like the retail side is extremely strong in Korea. I think a lot of them use like VPNs as well because they can't even trade there.
So I'm actually from Korea.
Okay, so you know.
Yes.
You're testing me.
No. I mean, I'm curious. Yeah. Your reading.
My perspective, yes.
Yeah. I've born and raised in Korea. I came for college and then stayed and worked there.
Sure.
So
do you agree with my take?
I think your take is spot on.
Yeah. But there's more to it than that as well. I'm just giving like high level, etc.
I think a little bit of cultural context is that Korea, countries like Korea, China, etc. Korea went through Ukraine war in the 50s.
Right.
Country was leveled. And then it went through a very rapid growth to where it is now. To be roughly a top 10 economy. So the financial industry and asset management and people's practices around investing didn't really have the time to grow and mature slowly over time as it did in the United States. Yeah. But people are much more used to managing their own money, trading their own money. And so kind of the day trading culture, the stock day trading culture is actually much more, even before crypto shows up to the scene.
Right.
Or it is much more kind of popular phenomenon among people. And when cryptocurrency came around, it was just very much adopted by that crowd. And that crowd has been very strong. And so trading volume, the speculation, very strong. Something that I noticed this year, I was at Korea Blockchain Week as well, is that this year was the first year that I felt that actually regulators and institutions were engaged in a meaningful way.
That is true.
I think they're thinking about stablecoins in a meaningful way. I think they're thinking about how still Bitcoin ETFs are not even the U.S. ones, and definitely not domestic. There aren't any domestic ones that have been allowed, but allowing ETF exposure is very seriously being discussed. And I think those two things, concrete things, are actually quite moving ahead, and that shows both kind of more traditional institutional kind of investments being kind of open for business potentially, and also stablecoin, the kind of utility of finance, like payments, also being open and allowing banks to actually engage with public blockchain rails. I think that conversation is actually arriving now, which feels very different to me. So I would agree with what you said, but also I think this year, or how it's evolving, is quite new.
Yeah, I agree with that 100%. I think the stablecoin conversation was massive there too, and I feel like every conversation just geared back to it. And even our conversation right now is going back to stablecoins.
We can stay away.
We all right, staying away from stablecoins. Let's think about the future. What does the future of digitizing assets look like? How do you think of like companies like BlackRock, JP Morgan, etc., getting into this space? And then like for Bitwise, what are the key objectives to scale by end of year 2026? You guys have been doing this for years. So what really is on the docket for you? And then how do you think about, the future of tokenization, asset management, etc., playing a role in Bitwise's
amazing
mission?
Yeah. Our mission is to increase access on education, especially towards kind of Main Street and traditional financial professional investors that often don't have the luxury of being really in the industry, spending 24/7 time to really understand everything. So our job is to make it simpler for both to understand and to access. And ETF vehicles, for example, is one way of doing that. I think most people in crypto think of the ETF moment as like having come and passed. But if you think about investing dollars, actually, self-directed retail is about 3 trillion or 3 to 5 trillion in the United States. So that's the people that trade on Robinhood or that manage their own money on Schwab and Fidelity. About 20 trillion, multiples larger, is actually managed wealth. So people that have, you in the U.S. often at a certain wealth level, you don't manage your own money. You have managed wealth or family office if you have. And that is actually where most of the investing dollars exist. And those dollars actually didn't really have a way to get access to this product until January of last year when the Bitcoin ETFs launched. And even after they've launched, the top 4 kind of wealth platforms in the United States, referred to as wirehouses, are Morgan Stanley, UBS, Merrill Lynch, and Wells Fargo. All of those firms have not really approved Bitcoin ETFs for solicitation, as in meaning that they're only allowed to be invested in its client's ask. Like it's like if a product wasn't really on the shelves on Walmart or something. You have to ask to see the product. That is the level of access that people had, and that's all changing now.
Right.
That's really all changing now. And so for us, if you think about our business, actually, even though the products launched last year, now is when the doors are actually opening up. Our products are actually going on shelves. And so I think next year is going to be a big distribution year for us. Really get these products being able to access our core client base with this. We work with about 2,000 or more kind of Wall Street teams across the United States that own our products in one form or the other. And I think that market is just going to grow another order of magnitude next year. And we're focused around that.
Yeah.
Around kind of more frontier future things, I think so we also have a staking business. You can almost think of it like if it's Ethereum staking, it's non-custodial, but still the relationship is quite an investment relationship, where they're relying on us on investment solutions, and increasingly also with DATs and public companies that are looking to do that have large holdings. We have beyond just staking, kind of DeFi kind of investment and yield strategies, or on Bitcoin side, kind of options and derivative strategies that generate yield. I think those products are kind of the next after like you have the exposure. and you have a lot of it, the next question you ask is like, what can I do with it?
100%. Yeah.
And that has really also been the main conversation outside of like, how can I get my first exposure to the spot ETFs? Once you have that exposure, then what can I do with it? It's like if you're sitting on cash, you usually do something with that cash. You don't just sit on it. So if Bitcoin is actually money, or Ethereum is actually...
So institutional staking and things?
Yeah, staking, or on the Bitcoin side, kind of options, strategies, is very much the next step that everyone is taking. And then we're the ones that took that step this year. I think then they're thinking about the next step after that. If you have a staking position, should you further lend that out on a DeFi protocol?
Right.
Or all these questions are the things that kind of retail investors that are savvy, that have been all using and very familiar with, is now kind of coming to our client base and audience. Lastly, what I'd say is that there are this SEC, Paul Atkins gave a speech about the crypto project, and basically almost like it's like a I want to send someone to the moon.
It's a green light, 100%. Yeah.
It's almost like I don't know how we will bring the U.S. equities market fully on chain, but we'll make it happen in my time. In the next few years, like I don't know all the rules. Even just today, there was a rule around how state charter trust companies can now be qualified custodians in the kind of 40 Act and 33 Act investment rules in the SEC. SEC is continuing to issue rulemaking to remove all the roadblocks, and the chairman is saying that we're sending a man to the moon. We're bringing U.S. public equity on chain, and I think we're tracking that, and everyone is tracking that. It's not only just now like crypto startups that are tracking that, but BlackRock is tracking that. You know, New York Stock Exchange and Nasdaq is having conversations with the SEC about how. If equities are tokenized, can we trade that on our national security exchange? Why not?
Exactly. Why not?
And once those doors open, then you can really have the full port of Wall Street and asset management and finance move over on chain. I don't think anyone has kind of all the answers as to how you meet all of the rules, how all of the everything kind of compiles down to things that we can practice. But what's very different from the previous administration at SEC is that previously there was one roadblock, and that would be used as a technicality to just stop the full train. And this SEC, roadblocks that are really not there that to help protect investors, or it's really according to the spirit of what's trying to be achieved, then the SEC is very set on removing them. So that the train doesn't have to stop, and we can figure out how to get to A to B. And so that is also where we have our eyes on the immediate things that we need to do, the opportunities that are opening, the distribution opportunities, or what our large institutional clients want to do. But then I think we're also looking 2 or 3 years down and how the whole landscape can change if we have tokenized equities, if we have kind of on-chain asset management. Like we're starting to see vault products that look and feel like investment products that are in the traditional space. And so on-chain asset management, tokenized equities, how all that fits together, I think is also something that we're very interested in.
Amazing. Well, Hong, I know you have a very busy day today, and I'm so grateful for you to taking the time to sit down with me. But before I let you go, can you leave us with a piece of advice, something that you've carried with you throughout your time in this space?
Oh, I mean, yeah. I would say to just really maintain a bit of perspective. Sometimes I think in crypto, people can get lost in a price chart of this month, this quarter, this year sometimes. Bitcoin is flat this year. And if you've been staring at the Bitcoin chart the full year, then you're probably depressed by now because you've been waiting for a
happily pump. Depressed? Yeah. If you bought it earlier, yes. But yes.
Yeah. Well, December.
The lack of movement.
Yeah. But, and even people in the industry often sort of but what I would, if you had any perspective, for example, Uniswap didn't really exist 5 years ago. Now does as much spot volume as the largest spot exchange in the United States, Coinbase. If you told me 5 years ago when basically Ethereum was considered a ghost town, vaporware and ICO, nothing had come out of that. If you told me in 2019, 5 years ago, that or Ethereum program would be doing as much spot volume as Coinbase in just 5 years.
You'd say they're crazy. Yeah.
I would have told them that you're crazy. I mean, I would hope there to be adoption, but let's be realistic.
To that standard, yeah.
Yeah. Same thing with stablecoin. Stablecoin didn't really exist 5-6 years ago. Now it is 200-300 billion, and if you told me that we have 200 billion in stablecoins, I think again, let's be measured in our expectations, is what I've been told.
Yeah,
and that is where we are.
Right.
So I think the train has never stopped, and the pace of that train is accelerating if you take a step back at any time horizon, and that's the perspective that I have, that Bitwise has, and I've never been more excited about the future. So yeah, with always, I think the one advice that I have for people that are entering crypto or have been in the space for some time and feel a little delusioned is just take a step back and look at how much we've achieved.
Amazing. Hong, thank you so much for coming on today.
Thank you.